Welcome back. Well, in terms of the broader markets, the stocks which are doing quite a bit today is Sundaram Finance. That stock is high by 8%. No new news flow as such, but that stock is definitely seeing a lot of buying action. 8% up move on Sundaram Finance. Yes, it's off the highest point of the trading session, but when the markets were tumbling, this stock was actually surging. So, interesting case there. Blue Dart as well. There was a brokerage note that came in this morning. On account of that, that stock is up by 4%. JB Chemicals is seeing a surge of 4%, and then Lemon Tree Hotel is the other stock that we are watching out for. On the losing side, Jindal SAW is down around 11%, and the rest of the defense pack. So Bharat Electronics is of course seeing that brokerage, downgrade reaction, but BEML is down in the trading session. A Cochin Shipyard, a Mazgaon Dock. All of these stocks are seeing quite a bit of reversal. In fact, that's the question that we posed to our battery of guests today as to what the prospects are of the railway and defense space, given the fact that on one hand, the order book has been strong, people are calling it the long-term play, but what is priced in the valuations is the big question. Let's go across and listen in to what our guests had to say on railways and defense.
Exuberance is very much evident, Nikunj, in my opinion, in these railway and defense companies. But again, I believe these companies are in that long haul movement, with a long runway. So so there can be, some of these great companies with great future. There can be correction, and it can price-wise correct 20-30%.
Every time people come in this market with a new theme, with a new dress and new concept, and ultimately that concept lasts for maybe 6 months or 1 year, or maybe 2 years sometime, and then they fizzle out. I'm not saying the story in those stocks are over. The story may play out maybe for a decade or so, but valuation is too high and there is euphoria in this market. I will not buy those shares, and this is what I can say.
I would definitely urge that this is not the time to just blindly get into something because there's a name defense or a railways or a shipbuilding or an EMS attached to it. Be discreet. There is, as I said, a lot of opportunity in these sectors.
Whenever any rally becomes parabolic, it usually does not sustain, and that's clearly happened in defense and railway. And we have been recommending aggressive profit booking in both these spaces in the last few days, and we continue to recommend the same because I think this is just crazy because people are just factoring in too much into the future, discounting too much into the future, which I don't think is right.
Okay, let's take the conversation forward. We have Siddharth Khemka as well joining in on the show right now. Siddharth, hi, afternoon. Just wondering whether you're recommending booking profits anywhere. We are seeing quite a cool off in some of the cap good names, power financiers, railway and even defense stocks.
Yeah, very good afternoon. So I heard the guests and panelists on your show. So basically, if you look at what has been happening is we have been sounding some cautiousness in the broader market, be it the mid caps or small caps, given that the kind of rally that they have seen in the last couple of months, and also because if you look at the valuations, a mid cap index is trading at about 24 times 1 year forward. 24 to 25 times roughly on a 1 year forward basis compared to Nifty, which at 20,000 is trading at about 21 times on a FY24 P. So the premium is now about 15-20%, and that is a space where one needs to be cautious. We don't believe that there is going to be a full large scale selling in the mid and small caps, but a healthy profit booking is definitely advisable, and that is something that we have been kind of talking to customers, but it is not a broad based profit booking that we are advising. Selectively, some pockets which have done very well, where the valuations are kind of discomfort. Some of the space which has run up are the same names like shipping, defense, railways. Some of the railway stocks are still available at comfortable valuations of 20 or 30 times on a trailing basis, as we don't have a coverage on a lot of them. But as I said, some of them are trading at much higher valuation, and there is where the need to do some profit booking if someone has bought, and people need not fear of missing out. That is something that has picked up quite a lot in the last couple of days. That is something that people need to be very cautious about and not to jump into this space at this juncture.
Coming in as far as market is concerned, but the other big event that we are watching out for, and this is beyond the market for the Apple lovers, and that's the Apple's Wanderlust event, which is in focus. And the latest that we are hearing is that we might see the launch of a made in India phone. Let's go across to my colleague Samita to get more details on this one. Hi, Samita.
Anisha, in fact, this is the Apple season, and new iPhone 15 models are just a couple of hours away. Tonight, the big event will be beamed live from Cupertino, where CEO Tim Cook will be unveiling all the big new launches, which will include Apple Watches, iPods. In fact, two new watches will be unveiled and 4 new iPhones will be unveiled. So you'll have the iPhone 15 and 15 Plus, which are the base models, and then the iPhone 15 Pro and Pro Max, which will be the more premium models, which will be more expensive. And these are the models that are expected to see a newer, faster processor as well, while the base variants might not see an upgrade in terms of processor. But yes, there will be a new dynamic island as well, which is a pill-shaped cutout display on top, which was a hit last year, if you remember, during the event. But now coming to Apple India's launch strategy, remember this is coming in at a time when Apple has, for the very first time, 2 retail stores in the country. Remember, just a couple of months back, CEO Tim Cook in fact stated in an earnings call that India presents a great opportunity, although it just has 5% of the market share, but the expansion opportunity is huge. He also mentioned India more than 5 times in that earnings call. So this is very, very crucial. Another very crucial thing to watch out for at tonight's event is that Apple could do away with the quintessential lighting charger and could opt for a USB Type-C charging port after a European Union strict regulations. Now, when will that be rolled out? Will that be rolled out just for the just for the European market, or for the Western markets, or for India as well? That will be an interesting thing to watch out for. So these are just some of the key highlights. Now, this is also coming in at a time when sales of iPhone globally have seen a slump, but the India market is a different story. India is a bright spot for Apple. We saw Apple CEO Tim Cook come earlier this year to launch to open these 2 retail stores as it's ramping up its retail strategy. In fact, the China market also has been presenting a challenge for Apple CEO Tim Cook for the brand, because increasingly government officers are being encouraged to not use Apple iPhones due to the stiff between China and the United States in terms of a tech war. Perhaps what's playing out is what analysts are stating. And yes, you could also see for the very first time made in India iPhone 15, which could be rolled out as soon as it's rolled out in some of the other markets as well, is what analysts and industry insiders are telling us.
Apple, Android. Which phone are you holding in your hand? Is it an Apple? Samita, which phone are you holding? Is it an Apple in your hand? Oops, noise in the Delhi studio. That's noise in the Delhi studio, otherwise she's gone. Bit of an Harry Potter there. Okay, never mind. Yeah, just like Harry Potter happened. You know, Apple has got this thing that even when the links are discussed, something happens magical.
Wow.
That's Apple for you, right? I mean, just think about it. Apple is one of the most valuable company in the world. What do they give you? They give you a difference experience. Amazon is again one of the biggest companies in the world. What do they give you? Cheap, cheaper, cheapest. Apple is good, better, great. And they both coexist.
Most expensive.
Most expensive. So they both coexist. So there's customer for both. And the irony is that you go on Amazon and sometimes buy Apple. What happens?
Yeah.
Happens. For me, it's going to be Apple 15 made in India for the world. It's almost like, deja vu moment, dream coming true. What Prime Minister Modi, I distinctly remember when he said that, India should stop importing and India should start exporting. Not made in India for India, but made in India for the world. Yeah. And just that's the kind of, impact we have. By the way, where are all the EMS stocks? I just want to see. That's again one space where the run-up has been quite extraordinary. Sirma SGX, Keynes India, again, those stocks are correcting. So typical, anything which has been the high flyer, which has really been the big mover of late, that space has gotten completely down. I think Dixon is in FNO, right, Kunal?
Yeah, Dixon is in FNO.
How would you approach this stock now, given that the tide is turning?
I think it's been a very good stock, Nikunj. Over the last, 3-4 months, the stock has recovered from 3,000 to 5,000 levels. So, and I remember, at those 3,000 levels, there was a lot of negative negativity surrounding the stock price. So it's managed to recover, not just recover that entire sell-off the stock had seen at the start of 2023, but in fact even go beyond those 5,000 levels for itself. Now the stock is already at a multi-month high. I think it's almost at a 15 or a 18-month high for Dixon, closer to this 5,000 odd levels. Looks attractive, and I think traders should hold on to the long positions over here.
Very interesting. India Bull Housing Finance is down 10%. And that means it's locked down, right?
Yeah, it's an FNO, so it's not locked down as such, but the circuits will keep on
changing. Naresh, you want to come in on India Bull Housing Finance?
So the stock has made a very large move and it is retracing the move back. So I would expect it to pause around that 160, 170 mark, which was the earlier support for the stock. But the stock has a tendency to make such wild moves. So if one has the risk appetite, maybe could look at it closer to 160, 170 to actually buy with a stop loss below 155.
So that you track Sundaram Finance. Any reason why that stock should be high by 8%?
So we don't track Sundaram Finance as of now.
Okay, any other NBFC names that you like?
Yeah, so if you look at overall banking and financial space, that has been one space which has kind of underperformed the market rally that we have seen in the recent months. And in that, banking is something that we keep liking it. We like HDFC. We believe that the company has delivered strong performance over the past 2 decades. The merger brings in synergies and the overhang of the merger is now behind. So I think that is one stock which should do very well from here. The other is Axis Bank. Again, we have been looking at their annual reports. The bank has strengthened its retail franchisee and has consequently pawned the bulk deposits. FY23, the Axis Bank posted 21% growth in CASA deposits, which was much higher than its peers. Asset quality has improved. ROA has recovered, which has been further aided by steady loan growth and moderation in OPEX. So we expect Axis Bank ROAs to improve to 1.8%, ROEs to almost 16% by FY25. That is something, again, within the banking space that we like. So these are some of the names that we like from the overall banking and financial space.
A couple of other stocks which are seeing, move. And today, sectorally, if there was really one sector that you were to pick out, that's actually pharmaceuticals. That's where you're seeing the brightest spots. I mean, sure, yes, TCS, Infosys are all holding out okay, and some of the other IT majors as well. But Divi's, Dr. Reddy's, most of these names from within the pharma pack, Sun Pharma included in there, they're all holding up very, very smartly indeed. Naresh, any opportunities within pharma to go long?
So it would be selectively Sun Pharma itself, which has been a low beta stock comparatively. So I would go with Sun Pharma. The stock is coming back to the levels of 1150, 1200, which was last seen in 2015. So that looks promising. TV's Labs actually came close to a breakout today. If it can sustain 3900, that would be a trend change. So I would be looking out for Sun Pharma and DVs.
Nifty again, what do we have there? And Naresh, I just want to start, perhaps address a very elementary point which we were discussing in the morning, that we've seen Nifty being in a range for a long time. It's been in this giant range for a extended period of time. And the range was, in a sense, we broke out of the range yesterday when we touched 20,000. So after a giant period of consolidation, if Nifty has gone and made a new high, do you think the rally could extend itself? And today's indication is a clear indication that the outperformance is real and here to stay.
So we saw a drip from 20,000 to 19,200. And it was a flag pattern. We gave a breakout of 19,500 and we moved to 20,000. That's the previous high. So a little bit of jitters out here would be normal. A previous high test. We even saw that happen at 18,800. We paused for 4-5 sessions and then made a move from 18,600 all the way to 20,000. So out here, ideally, we would expect 19,600 to hold and a dip to 19,800 remains a buy. And a stop below 19,600 and a target price of 20,500 on the Nifty. So the bias remains positive till we hold 19,600. And clearly, the signs are that large caps could take leadership, at least for the short term.
Coming in, Siddharth, from the entire industrial space and infrastructure space, is L&T the best bet? Or should one look at the likes of ABB, Thermax, Siemens as well?
So, Anisha, if you look at the entire capex theme, has been doing well for past couple of quarters, and not only the order book has improved, the execution has also seen sharp improvement. L&T definitely is the proxy play to the India capex, India infra story, and that continues to lead from the front. But we have also seen good performance in terms of earnings growth from the likes of Siemens, ABB, which continues to do well. Private capex is something that we have been talking about for past couple of months, and that has kind of picked up not only the government capex, which has been supporting for last couple of years, but the private capex has also kind of seen inching up. A lot of capacity expansion programs announced, and that is something that we believe should help the broader spectrum of capital goods space as well. Something like Siemens, ABB, that also they have done well, and I think from here we could see a steady growth in terms of what the earnings delivery they could deliver. Market would kind of give that kind of return to these stocks as well. L&T clearly remains the favorite pick among the infra cap good space.
What do we have? Oil India, ONGC, typical outperformance in some of the PSUs, I think, is getting challenged. Kunal, another favorite for traders has been BHEL. Where is BHEL headed now?
So I think after today's sell-off, the stock should see more aggravated selling, at least from a very short-term basis. Now, the near-term average, so the stock had a tendency of coming closer to its 50-day moving average, not exactly touching it, but then missing it by a margin of 0.5% to 1%. That average is now closer to 106 or 108 for BHEL. So I'm assuming that in this leg of correction, the stock could retest its or come closer to its 50 DMA. That should be around 110 mark. So at 125, 26 mark where it's trading right now, I think one should be prepared for at least another 15 rupees sell-off on the stock.
Where do you think the party is over? It's time the Cinderellas of the home, they should go home.
So Power Finance names, the ones which I think I've been highlighting, I definitely see some sort of an aberration in terms of the momentum, the volumes, as well as the price movement. So momentum has been missing. The volumes have been dry relatively as compared to the previous attempts of the stock making a new high. It's just that the inertia flow for the stocks and the sentiment booster had led into this new high for the stocks. But I believe in this leg of correction, you could expect a dramatic drop down to the stock prices over the near term. I would also expect BHEL, etc., to also go into a further correction of 10-15%. So maybe a near term top could be in place into these kind of stocks at least.
Is it top or is it a sell?
Top.
Top means that book profits.
Yeah, so which means you're expecting 20 to 25% correction. So if the stocks
then
are
go short. 25% correction, that's great
BHEL,
correction.
Indiabulls Housing, I think so many of the stocks are in F&O ban. So you can only sell it maybe at the start of the day on cash market and then cover
Yeah, that's a typical. I mean, some of the stocks have just gone through the roof and then you realize, then F&O ban. So then how come they're going up? That's because of the technicality at play. Now let's see what happens at the end of the day today, because when stocks are down 8-10%, forced unwinding will happen. At least in BHELs and Indiabulls Housing Finance.
The entire PSU pack. I mean, I was just looking at some of the railway stocks, Nalco, etc. as well, which are ticker is highlighting, NTPC, and these have been some of the stocks which are all at life highs.
What were we discussing? That if you're a PSU, and if you are up less than 80%, we were discussing this yesterday. Then shame on you. But this entire fairy tales are great in storybooks. They don't exist in real life. I mean, it's not like Jack in the Bean stocks that, you put a seed and trees go up. That was happening. And I mean, there's classic parabolic moves which were happening. These are classic telltale signs that excesses were getting created. When excesses they get created, shakeout will happen, weak hands will get out. And then, new entrant will get in. Now, whether you go down by 10%, 15%, do you get into time-wise correction, price-wise correction, or the sector outperformance will continue? It's a judgment call, Aisha, really depending on the time frame you have. But in terms of this mad rush, which we've seen in some of the railway stocks and the defense stocks and the shipping stocks, I think the parabolic move could be coming to an end. Kunal, will I get it right? Will I get it wrong if I say like this?
No, I think it makes a lot of sense. And in this kind of a sell-off, the first thing which we typically tend to do is we book profits across the board for stocks which have run up, if I can use that word, obnoxiously high. So it makes a lot of sense to try and book profits over there. Now, whether to create shorts or not, that's part 2 of the strategy, because for that to happen, you need to see a decisive change of trend for these stocks. So you're not playing for that, just mild correction, maybe another 3, 4, 5% on the downside, because you're talking of these high beta stocks which have rallied significantly high. So you need to see a decisive change of evidence or an evidence that a decisive change of trend has happened. So it would be a bit premature to try and assume that this could be a strong sell-off mode for many of the stocks. We need to see the structure of how the markets approach into the profit booking mode. So the selling part, I would probably delay it by maybe another couple of days and see how the markets trend or which sectors and stocks they trend lower. But the profit booking part, I would definitely agree with.
Okay, so that's a take coming in on some of the PSUs, these names which have seen a massive run up in the last few days, months and weeks itself. What else is happening in the market? Well, if you look at the pullers and draggers in the market, it's TCS, which is your top contributor on the upside, followed by Infosys. So IT is clearly the pack, which is seeing a renewed buying interest. Siddharth, which are your top bets within IT? We were just speaking with Rakshit of Marcellus, and he talked about how they have been adding positions into IT. Is there any specific name that you like?
Yeah, Anisha. So I think IT, it's not a clear runway of growth. There is few more quarters where we could see sluggish growth. So it's not a full-fledged buy. It's a accumulate kind of a stance there. And within that also, if you look at some of the mid caps which have shown high growth, the valuations are a bit uncomfortable. So within the overall IT space, our preferred pick would be TCS, which is a market leader where we are seeing a steady, stable growth for the company, and we have a target price of about 3,800. So a decent upside. And beyond that, if you look at from the mid cap space, we like Cyient, which has been consistently giving us strong growth. So these two, if you mix up from a large and mid cap, I think could make a good combination from the IT space.
Okay, so that's the pick coming in as far as the IT space is concerned. TCS remains a bit of a consensus buy. We have been highlighting how deal wins have been strong. In fact, there have been 4 large deal wins of over $1 billion in the last 3-4 months itself. 2 coming in from Infosys, 1 each from HCL as well as TCS. So that space looking quite well. And of course, in terms of the valuations as well, there's not much to complain. So one spot which might be showing a bit of being in the value zone. In terms of the other, stocks which are buzzing around, there's Honeywell Automation, there's ICICI Bank, Divi's Lab, Narayana Healthcare is doing quite okay. In fact, the pharma pack across the board, whether it's hospitals, whether it's diagnostics, is doing okay. Siddharth, within the entire healthcare space, which are the stocks that you're watching out for?
Yeah, Anisha. So I think Sun Pharma is a consensus buy there, and that is something that we also like. But if you take the overall healthcare space, hospitals is something that we have been very quite positive on. We like both Apollo Hospitals and Max Healthcare. Apollo, we saw strong earnings growth in Q1, 16% growth, led by healthcare, which was up 13%. And strong growth in the pharmacy business. We believe that the overall occupancy levels have been about 70%, which is good. It is doing good capex of about 2,000 new beds over the next 3 years. And on back of healthy growth, sustained profitability in both the healthcare services, plus achievement of break-even in the health business. We are positive on Apollo Hospitals. We currently have a fundamental target of 5,700. So that is something within the overall healthcare space that we like.
Okay, and as a house view, what's the top recommendations or any new initiations or any new mid-cap ideas, Siddharth, that you've managed to dig in?
Yeah, so I think within the overall space, broader space, we did initiate a few new ideas. Raymond was one such idea that we initiated recently. We believe that the company has strengthened its business in the last few years. It has got new senior leadership, restructured its group. The promoters have put in capital. If you look at the core strength, it has a good mix of strong established brands, be it Raymond, Park Avenue, Color Plus, Ethnics, which it now plans to grow in a asset light, or you can say capex light franchisee model. The real estate business, which has been incubated in Thane, has been doing quite well. We have seen good execution there, good demand for its products. They now intend to expand to other regions as well. So that would also add on to the overall growth. In terms of consolidated numbers, if you look at the business is trading at a fair valuation. So if you do SOTP, the retail business trading at much lower valuation compared to its peers, which are trading at 45, 50 times. So overall, if you do the maths, I think that is one space where we are seeing incrementally strong earnings growth. The management's focus on separate businesses, be it the retail business or the real estate business, and that should do well according to us. We have a target price of 2,600 on Raymond's.
Okay, let's get in some BTST trades as well going before we wind up for the day. Kunal, what's on your list?
So there'll be two buy calls. The first one is about Sun Pharma, the stock confirming a breakout in the daily charts today. So targets of 1200, stop loss at 1125, and the second is a buy on ITC for a target of 465, stop loss 447.
Okay, so that's the take coming in. Naresh, your view?
Buy on Axis Bank, stop loss at 990, target price of 1030. Sell on Trent, which seems to be topping out, stop loss at 2070, target at 1950.
Coming in. Siddharth, before we let you go, your view on the entire auto space and the latest news coming in about that 10% additional tax. What do you make of it? It's still, of course, in the works and we don't have the clarity, but would spell a very bad news for Cummins, Bosch, M&M, Tata Motors, Ashok Leyland?
So yeah, Anisha, if it comes, definitely it's a negative, especially if it comes on CVs and tractors where you have only diesel engines and there is no alternative. If you look at some of the passenger vehicles company, especially the likes of Maruti, they have been clearly moving away their portfolio from a diesel heavy portfolio to a petrol and now CNG and hybrid technology. So I think if that comes and there is no clarity yet, but if it comes on CVs and tractors, it is definitely a big negative as it would increase the cost straight away by 10% and hit an area where there is no clear alternative. Yes, there are some EVs which have come, but I don't think the infrastructure is ready for CVs or tractors for the EV to penetrate. In the passenger vehicles, yes, more and more companies, even if this is not implemented, I think there is a clear message from the minister that gradually they have to move away from these fuels and start looking at alternate fuels. And that is something which could kind of lead to more innovation, bringing more hybrid technology. And I think that would what drive the passenger vehicle segment there. So we have already seen a huge penetration of EV, specifically in the two-wheeler space, which will now kind of get driven into the passenger vehicle space as well. The Maruti is best suited with its portfolio of petrol, CNG and hybrid technology, and clearly much ahead in terms of moving away from the diesel space. So that should do well.
Right, okay. Let's talk about how we're shutting shop for the day. Kunal, Naresh, Siddharth, all of you, thanks as always for joining in.